CFA front. Let's talk about Nigeria's Debt Management Office. Joining me now for further details and understanding of the Eurobond market offering is the Director General at the Debt Management Office, Patience Oniha. Good evening, madam, and welcome to the show tonight here on Arise Exchange.
Thank you for having me, Bosin. Good evening.
Good evening, madam. Let's start this conversation a bit on the side about when we talk about a Eurobond, what are the borrowing laws and rules around and the processes around a Eurobond or securities issuance that your office superintend?
Thank you very much. I think the first statement I'd like to make is congratulations to Access Bank. And then responding to the question is to say first, borrowing is regulated principally by the Fiscal Responsibility Act 2007 and the DMO Act 2003. So that means when we want to borrow, we have to comply with those two, whether domestic or external. So the usual process is through the budget. That's the usual process. It then goes to the Federal Executive Council and then the National Assembly. And once the president signs the appropriation bill into law, then it becomes a law, and the DMO then goes ahead to implement the new domestic borrowing and the new external. Okay, so but with external, it goes a further step, even after those approvals have been secured. Section 21 of the DMO Act requires that for all external borrowings, a resolution must be obtained from the National Assembly approving the terms and conditions of the borrowing. So that's how we do Eurobonds, diaspora bond, and all other external borrowing that you see us report in the public debt.
But as of today, what's the size of Eurobond in Nigeria's total external debt portfolio?
Okay, so Eurobonds in particular would be 10.223 billion US dollars, because we also have a diaspora bond of 300 billion naira. So that's what we have outstanding, and we have maturities all the way from 2022 to 2049. So in the international markets, we have up to 30 years Eurobonds. So it's spread across a wide range of tenors.
When we look at this Eurobond, which is a commercial side of borrowing outside the multilaterals and others, what benefit does it offer the country, and how is the proceeds being applied, really?
Okay, the Eurobond has its own peculiar benefits. So let's just say some benefits are general, whether it's Eurobond or other sources of borrowing. But Eurobond has its own peculiar benefits. So the first one is to say that with Eurobonds, you subject yourself to the market, and depending on how investors perceive you, you hopefully can raise an amount that you need and approved, that has been approved, as well as for tenors that you want. So there's more flexibility, but it also has speed in terms of an ability to raise the funds and deploy. With the multilaterals and bilaterals, the process is fairly lengthy, even those are cheaper. Okay, so having said that, the Eurobond does bring foreign exchange into the country. And when we look at the foreign exchange needs of Nigeria, both for reserves, for supporting the Naira exchange rate, for imports, the Eurobond does that very quickly because the proceeds come into Nigeria.
Madam Director General, thank you very much. We apologize, we lost you very quickly there. Could you please continue on to talk about the benefits and, of course, the proceeds of the Eurobond being applied?
Okay, so the proceeds go to finance projects that are already approved in the budget. Don't forget, this is a new borrowing to finance the budget deficit. So there are capital projects already included in the budget. In terms of benefits, like I said, it is faster to complete, so you get the money quickly to implement those projects and achieve the objectives of the budget. But very important, it does add to external reserves, so it supports the Naira exchange rate. And borrowing through Eurobonds enables the government to reduce the volume of borrowing it would have done in the domestic market. So it creates space in the domestic market for other issuers, and hopefully also moderates local interest rates. Very important, you were talking about access there. One of the things the government has done through Eurobonds since 2011 is that it has created the sovereign yield curve in the international markets. So when other entities domiciled in Nigeria are issuing Eurobonds, there's a yield curve against which to benchmark the pricing. So it benefits the sovereign, it benefits the corporates, it benefits the economy as well.
Okay, so tell us about the current plans to return to the global market. What are the market conditions right now, and when is Nigeria going global on this?
Okay, market conditions are definitely at this time favorable. Don't forget markets, we haven't been to the market since 2018, like you said. And in fact, in January of this year, we did redeem 500 million Eurobonds. So there's a strong appetite for Nigeria's securities. But when we look at COVID last year and this year, markets were not as active as they would have been. But market has bounced back, and there's appetite. We've already appointed transaction advisors, as you know, who we're speaking with. What it is that we plan to issue Eurobonds for the new external borrowing of 2.343 trillion naira provided in the 2021 Appropriation Act, which roughly translates to about US dollars 6.12 billion. We think we can raise it at once or twice, but we are positive that we can raise those funds. Don't forget, we have Eurobonds already that are trading, so we're tracking that as well.
What about the local currency exchange rate considerations for Eurobond borrowing?
Well, like we said, the Eurobond actually serves a purpose of making foreign currency available. It's an inflow, all of it in one fell swoop. So that whole impact is felt in external reserves and can support the Naira. So that's one part of that. The second part, which I think is the import of your question, is does it give you an exchange rate risk? Certainly where exchange rates are not stable, especially when there's a depreciation, there's an exposure there. But it does achieve a significant impact in the immediate and short term.
On the final note, here is Access Bank did a $500 million Eurobond. The offer was overbought $1.6 billion. So if you go to the market tomorrow, Madam Director General, do you think you will beat this figure?
Oh, absolutely. Like I said, I've congratulated Access, but as you know, this is the sovereign, going to the market. And in 2018, we actually were in the market twice, in Q3 as well as in February. So we raised more than $4 billion US dollars in 2018. So we think we can even beat that.
When is your formal announcement?
We expect that to be very soon. That's the much we can disclose very soon.
Thank you.
We're working very hard.
Thank you very much. We wish you all the best, Madam Director General, for speaking with us. Patience Oniha, DG Debt Management Office. Well.